Hi guys. Recently I've had quite a high amount of people, young people, inquiring about buying a property, and they're quite interested in getting on the property ladder and in real estate. So I thought I would do a quick video just to kind of give some tips on kind of what to do before, and to kind of get you ready before you get a mortgage. Property is something that I hold very dear to my heart. I think that it is a good investment, and I also think that it is a good way in order for you to stem out and do other things. If you want to make a certain amount of money, or you want to get a large amount of money to do something else, like start a business, if you don't want to take out a loan. I know a mortgage is a loan, but if you don't want to take out a loan, like a commercial loan or anything like that, mortgage is a good way, because if you buy a property and in time, it appreciates in value, you can pull some of that money out, you can go abroad, you can buy another property. So I definitely think that property is the key. And I think this video isn't just for young people that want to get on the property ladder. It's also for people that might have one mortgage, thinking about getting another one. Number one would be get a permanent, stable job, because the mortgage company wants to know that once you get this mortgage, you have a stable job that you can pay the mortgage each month. So they want to see that, okay, you've been working somewhere for a decent period of time. And obviously remember that the bank will give you 4 times how much you earn. So money is the key, and earning a good wage is very important. So either you've been in a company and you've worked your way up, because I'm thinking there's some people that probably didn't get a degree, probably didn't get A levels. So I guess you would have to probably be in the company a bit longer to kind of work your way up in order for you to be on a good wage. Or I would say continue on to education, get your A levels, get your degree. If you can, go on and do your masters, but you can do that later on. But all of these type of things will help you get a job that pays a good wage, and that will also help you in turn into getting a mortgage that is a decent amount. So that leads swiftly on to credit files. This is what the companies use to kind of check your credit history. So it's very important for you to know what is on your credit file. So now, if you've never checked your credit file, I would suggest going to ClearScore, which is something that came out recently in the UK, where it's free to check your credit file each month, so you can know exactly what's going on. There's also Equifax and Experian, but those ones you have to pay for. I pay for Equifax. I pay like $2.99 a month just to alert me if anything happens, because sometimes if you don't really check your credit file, at least it alerts me there's been a change on your credit file, and then you can go and check it just to make sure that you're on top of it. So checking your credit file is very important. Also, don't apply for credit cards and store cards just willy-nilly, because all of these things leave a mark on your credit file, and the more marks you have on your credit file could go against you. So only apply for things if you know you've got a good chance of getting it and you know you really need it, because that will definitely go against you. There's certain things that just have light footprints on your credit file, like car insurance, those type of things. They just do a check. It's not something that is actually recorded. This is how much you're supposed to pay each month. This is what you didn't pay. Then you get a mark against your name as a missed payment and things like that. Once you check your credit file, make sure that you're not associated with anyone else that lives at your address, because sometimes you might have a relative with really, really bad credit, and they can come up on your credit file because you're at the same address. So if that happens, you can write to them to disassociate yourself from that person. So obviously that won't harm your credit. Check your credit file now, and if you do miss a payment from here on out, there's sometimes the opportunity for you to call up and say, oh, there was this happen. And if it's your first time, a credit card is likely to say, okay, we'll take it off your credit on this occasion, but next time we won't do that. And they will take that cross that they put on your credit file as a missed payment off your credit file. If you're someone that is, like a old school person, it's like, well, I don't really need a credit card. I don't need, a bill. I prefer to do pay as you go and stuff like that. You need to, if you want a mortgage, you need to get that out of your head, and you need to have some sort of credit. So if you don't have credit, you need to build some. And when I say build some, I don't mean go crazy and get all these store cards and credit cards that you can't afford and that you're not going to pay. I mean, get one credit card, use it. You know, there's stuff that you can think, well, why am I using it for? Because I can afford to pay cash, or I can afford to pay that out of my money anyway. But it's just so that when they do a credit check on you, they can see that, okay, this person has got credit and this is how this person handles their credit. So if you can get a credit card and you would spend a portion of it each month and then pay it off at the end of that month, that shows, okay, this person's reliable, that person's going to pay. But obviously, if you kind of leave it to accumulate and you pay the minimum each month, obviously you're going to pay more interest and it's going to take longer for you to clear it. That's not the end of the world, just as long as you pay it on time. So set up a direct debit for all of your bills. Don't say, okay, well, I'm going to pay cash and today I wasn't feeling well, didn't feel like going out, so I couldn't pay the bill. Set up a direct debit, set up a date that will come after you get your pay, and then all of your bills can go out at that point, and then you know, okay, all my bills are paid. Don't leave it to chance, because if you miss a payment, that will go against you. Where people tend to usually go wrong is that they'll take out a mobile phone and think, oh, it's only a mobile phone, it won't affect me. So after a while, you've taken out this mobile phone and you realise that you didn't pay it certain times, and it's like, okay, it won't affect me. Only when it comes time for you to get a mortgage or to get a loan is when you'll realise is that there's something called a credit file. So only at that point, they'll look through your credit file and they'll see, hold on, in 2006, you took out a mobile phone and you didn't pay. And now perhaps maybe you've got a CCJ, and that is when it can mess you up. So obviously it's very important for you to take even a mobile phone, and that is where a lot of people go wrong, because they think that it won't affect them. But mobile phones are the number one thing to messing up people's credit. Because remember, a company's aim is to make money. So you'll go shopping, they'll be like, take this store card. You'll walk past a mobile phone shop and say, well, we've got all these offers, you know, take this mobile phone out. You only got to pay $11.99 a month. If you can't afford it, do not take it, because that could be your downfall. Do not take out credit for anyone. Don't take out credit, and don't be a guarantor for anyone's loan or anything like that, because if they default on their credit, that then affects your credit file, and that can mess you up completely. So I know someone might come to you, someone really close, and say,
please, I need this loan, I need this car, I need you to guarantor it for me. You don't have to pay anything.
Don't do it. Friendships can sometimes go sour and disappear. That credit, that bad credit, is for life, or at least 6 years. It stays on your credit file. I would definitely recommend using your 20s, not just for fun and holidays and all that type of stuff, but to actually stop and think, you know, what is it that I want to achieve in life in my 30s, in my 40s? So therefore, I would recommend to use your 20s and early 30s kind of working hard, obviously saving money so that you have a good amount of money for a deposit. Because the larger the deposit you have, you can buy a property of higher value. So I would definitely recommend, as much as it's all about enjoying life, I would definitely recommend saving. I'm not talking about saving £1,000, £500 a month. Save what you can. If you can save £100, know that you're consistently saving £100. So okay, it'll take me this amount to get this amount of money for a deposit. So I definitely think whatever, obviously cut your coat according to your size. That's my mum's one, you know, cut your coat according to your size. So if you can save £50, save £50, but make sure you're consistent with it. Set up another account where when your wages go into, let's say, account A, you've got an account B where you don't see it on your online banking, or it's with another bank, so it's not something that you kind of see that, oh, there's money there. So kind of just set up a standing order and just send the money each month when you get paid. See, calculate what you can live off each month, calculate how much you would need for food, transport, bills, rent, all of that type of stuff. Calculate all of that, then add a bit on for enjoyments, and then take out whatever is left and put that in another account. If anything crops up, obviously, yeah, you can go to it, but I would suggest that kind of just leave that there to kind of accumulate and just save as much as you can. I said in one of my other videos, you know, do something today that will benefit you tomorrow. So I'm a big saver, so definitely save. You know, life sometimes can only get harder. So try and make it a bit easier for yourself by having that pot of money that if anything crops up, you know that you've got something there, and that you don't have to run to other people and say, can you lend me this? Can you lend me that? That you can actually, and it's a way of even being more self-sufficient as you get older, because you've got a little nest egg there that you can count on and depend on if you need to. Another thing that is important, firstly, getting your name on the electoral roll. So once you get your name on the electoral roll, which means obviously you can vote, it's something that kind of, this person is a stable resident in this country. So getting on the electoral roll is very important. So when they check your credit file, they can say, okay, this person is registered to vote, they're on the electoral roll, this is the address that they're on the electoral roll for. And make sure, if you're not living at an address, change it, unless you know that it's going to be temporary. There's no point, you know, changing everything every year and stuff like that. No, not good. It's better that you leave it at your parents' address or where you grew up, and then you can say, oh, I've lived there for 15 years, so at least you know where to find me if I don't pay my bills. So figuring out a plan from now of how you're going to get on the property ladder will be very valuable, because every day rent prices are going higher and higher and higher. Even though I purchased a property quite early on in my 20s, I honestly wish that I had this advice from my teens, because this is not something that they teach you at school, right? So I really wish I had someone that gave me this advice, because if, like, I know it's all about the Louboutins, the name brand shoes and the bags, you know, yay, but will they really help you in the future? Can you hand those shoes down to your child, you know? No, you can't. So I definitely think there has to be a balance. But like I said, I wish I had this information when I was younger, because yes, it's all about the flashy cars and the name brand clothes and shoes, but these aren't things that appreciate in value. They only depreciate. So with cars, I would definitely say, if you want to get a flashy car, I would say get it on hire purchase, you know, get it so you pay for it monthly. Some people are against this, but in terms of this, you know, in terms of helping your credit out, obviously that would help, because you're paying for it every month on time. Make sure you do, and you can, you know, you can change it after 5 years, give it back, get another one. When I was 18, I remember taking a loan out and spending £10,000 on a car that I couldn't get £1,000 for today. Come on, like, I wish I kind of had that information, you know, then, because then I probably would be better off today. So it's little things that I wish I knew. So I'm sharing that with my younger cousins and my sister and stuff like that, in hope that they kind of take heed of their advice and actually make some wise choices. Because obviously I know what people do. They take out loans and they'll go and buy a car outright, because then they know that the car's theirs. Do you want it? Well, you want it after 3 years anyway, because it would have depreciated in value. Give it back. Go and get a next one, which is the latest car there and then. Unless you're going to buy a car outright that would cost like £3,000, £4,000, then yeah, go and buy it outright, and then you don't have, you know, any monthly credit to pay, which is also good. But the UK doesn't work like that, where, oh, I pay everything outright in cash, you know, that works for me, but it won't work for you when you've got nothing on your credit file to show that you're a reliable person to lend money to. So these are all things that we have to do, and we have to weigh up, and we have to do them in proportion, and we have to balance them so that we feel comfortable with how much we're paying out each month. And there's also something on your credit file can show that you're a credible person when it comes to taking credit. So now you've got everything in place, everything that I mentioned, you've kind of looked into it, you've made sure that you're sorted. What I would suggest is speaking to a recommended broker. I'm sure any friends or family that you know that have got a mortgage and they've gone for a broker, you can ask them to give you their details. You can speak to the broker, get an idea of how much you would get as a mortgage, and then you can work out how much you would have to raise for a deposit. Or pop into the bank, speak to one of their mortgage advisors, get an idea of, you know, what you'll be working with in terms of figures, and that will be a good way to work towards your goal. I think that's very, very important. But I would say with a broker, you can kind of, you know, let them know these are the debts that I've got, these are the things that I've got, how can we work around this and things like that. So I definitely recommend speaking to a broker. So those are my tips for those who want to get on the property ladder and are considering getting a mortgage and buying a house, buying a home. If you have any questions, please do ask. Follow me on social media, Instagram, Snapchat, Facebook and Twitter. The only way is Ghana. You can ask me any questions. So take my advice and you'll be working towards great steps to getting a mortgage. So for those who are thinking of buying another house to rent out, we can do that another day. So for now, guys, bye.